Good afternoon, everyone, and welcome to today's presentation, Roadmap for Continuous Finance Modernization, presented by FEI Twin Cities Chapter. Before we get started, I'd like to review a few housekeeping notes. Today's presentation is worth 1 CPE credit. To be eligible for CPE credits today, you must answer at least 3 of the 4 polling questions during the webinar and have a total viewing time of 50 minutes. CPE will be available in 7 to 10 business days after the webinar. We are unable to grant CPE credit in cases where technical difficulty preclude eligibility. CPE program sponsorship guidelines prohibit us from issuing credit to those not verified by their technology to have satisfied the minimum requirements as stated. In accordance with the standards of the National Registry of CPE Sponsors, CPE credit will be granted based on a 50-minute hour. And before we begin, I would like to let you know that if you do have trouble with the polling questions, please answer your question in the chat box and we'll make sure that you get the credit. Now I'd like to introduce Roseanne Barr, who is going to do some introductions about our upcoming program.
Thank you, Nancy. This is Jill.
Jill, sorry, Jill.
Oh, no problem. Thanks for the introduction, and I'd like to welcome all of our members, strategic partners, and guests who are joining us for today's session. We're delighted to be joined by our strategic sponsor, Wolters, Kluwer, CCH Tagetik, to host today's session regarding how to build organizational agility by building a program of digital transformation in the Office of Finance. Before we kick off today's program, I'd like to make you aware that we've got several virtual programming events lined up through the remainder of the year. These can be viewed at feitwincities.com. I'd like to share with you just a few of those upcoming events. Our next monthly meeting is coming up next Wednesday, November 11th at noon to 1 p.m., where we'll be joined by Brian Cove, FEI's Managing Director of Technical Activities and in-house lobbyist, where Brian will share with us his thoughts on expected impacts from yesterday's election, including potential changes in the areas of tax policy, healthcare, and business regulation. And then on Friday, November 13th, join us at noon for a panel discussion to discuss the diversity and inclusion evolution in corporate Minnesota. In this session, we'll discuss the diversity inclusion initiatives that businesses across Minnesota are engaged in, along with the challenges that they're facing and the steps that they're taking to continue to build diverse and inclusive organizations. And lastly, look for upcoming virtual networking events, including a Vikings-Bears pregame tailgating party on Monday, November 16th, and a Cooking with Crocus Hill event on November 19th. And now, I have the pleasure of introducing today's speakers. Please welcome Marco van der Kooij, Managing Director of ForSight Consulting, and Leslie Cant, Director of Product Marketing. And I'll turn it over to Marco.
Thank you very much for the introduction, Jill. Alrighty, so we're happy to be here today. We're going to take a look through at Wolters Kluwer CCH Tagetik, talk about the continuous modernization with Marco van der Kooij from ForSight Consulting, enabling your finance transformation with CCH Tagetik, and of course, customer success stories. So CCH Tagetik is part of the tax and accounting division within Wolters Kluwer, a 180-year-old company with serving customers in over 180 countries. Our own division, CCH Tagetik, has over 1,200 customers, and we've been serving those customers for over 20 years. What we do is we're empowering the Office of Finance to accelerate their close, accelerate their decision-making with planning and budgeting, profitability, and regulatory products. We serve a global customer community here across all and any industries, and we also handle a range of complexity from the simplest consolidation through to the most complex. When you're talking global multinationals, we're crossing many different currencies, many different regulations. So we're helping these customers empower them to create value, to have, to save their time, to control costs and reduce risk. And with that little intro, I'm going to hand it over to Marco van der Kooi.
Thank you, Leslie. And I'm very happy to have the opportunity to speak to you all. As you can hear, I'm not Native American. I'm from the Netherlands and joining you from the Netherlands as well. But I have a very broad experience in the corporate performance management, business intelligence market for more than 25 years. When I look towards what's going on in the Office of Finance, and there are some changes, and actually some of these changes are here for a while. I like the changing expectations for the CFO to become a business partner. And that's ongoing for more than 20 years already, that the CFO has been asked in order to do so and to be much more involved in providing information towards the CEO, but especially towards the business, towards the operation. But in order to do so, and that's definitely a big change compared to more than 20 years ago, is that now technology is driving change. The change in technology is going very fast, and especially the magnitude of data that can be dealt with is increasing a lot. That's why I speak about big data, but also you need a lot of data to leverage that for predictive analytics, to apply machine learning, etc. And if you do that in the right way, and you can really use that data to provide forward-looking insight, that can really improve the agility for a competitive edge, according to me. What we also have seen is that there are quite some changes towards legislation, for instance, for insurance companies, concerning revenue recognition, concerning lease accounting, quite some regulatory changes were there. But especially what was with these changes is that it is required to capture much more detailed data. Like lease contracts, you really need to capture it at the contract level. Same for the insurers, you need to capture data at the policy level. And now that data also needs to go through the Office of Finance in order to use that for all kinds of compliances to make sure that you meet that. So that's what we see in that part as well. On the other hand, what's also very important is that the way how you present your data towards the various stakeholders. There are new initiatives already for a while, like integrated reporting or the sustainability goals. And it's important to tell a story around it. And you see that kind of change towards all kind of annual reports already for quite some years. With all that data, what we see as well is that security and data governance is very important. Not only when you are going to the cloud, also internally it's very important, but definitely lately we've seen a big push towards the cloud. And for that it's really important to make sure that everything is okay. And also what you see is as more data is going through the CFO office, that the CFO office needs to act as the data steward. And I will come back to that later on as well. What you see as well is that also with this data that users want to be self-service, but you want to provide them self-service with control. What do I mean by that? That is that people are not copying data into their own Excel spreadsheets, doing all kind of calculations to it, adjust the data, etc. Because then, yeah, you know, you're not longer in control. No, you need to have the capabilities that they can still do their own analysis, build their own reports. But if they make changes, then it needs to go through a journal entry, and you need to see all these changes in an audit trail, for example. And especially what's important, that it's also performant. So by the time you have a question, and you dig deeper into the data, you get an answer to that question, that a new questions pops up immediately, and that you are able to navigate through that data really, really fast. All these changes have a big impact on people, processes, and towards a data-driven architecture, which I will explain later on as well. Also, what we have seen is that it's really important to make sure that you can attract and retain and grow finance people and data savvy talents within your organization. And for that, continuous modernization is required, according to me, to make sure that you keep up with all the changes, but also that people are requiring it, as they are used to, especially the millennials, are used to work with iPhones and iPads, etc. Leslie, please go to the next slide. Also, what we have seen lately, because of the COVID-19, is that planning and profitability management needs to take place in really unprecedented times. So what we have seen as of March, April, I've never experienced that before myself in my working life. And what we saw is that companies really needed to take a very close look on their cash. Which means that it was really important to get that information, especially about your working capital, what's in stock, can we still deliver products, because some industries were impacted in a favorable way, like supermarkets, while others were impacted very negatively, like air carriers and transportation in the beginning, especially also events, etc. And for that, it was really important to do scenario analysis, like what-if analysis. And what we also saw is that it's really important to have insight within your organization, not only for the people who needed to work in a different way, but also the way how you interact with your customer changed drastically. So these were all very important aspects, and in order to get that data, and what I saw is that quite some companies really had problems in getting their data through finance or through IT, because they were used to do, for example, a monthly closing, while now the data was needed on a daily basis or on a weekly basis. So for that, new instruments were required in order to do so. Also, what I saw is that companies directly implemented cost-cutting programs, like in financial services, that happened a lot. And in a way, because of the digitization, it was easier to close offices, to close branches. But also what I saw was changing business models, because where first there was brick and mortar, a lot of things were changing towards the internet. And also in the Netherlands, there was a beer brewery. And because all the bars were closed, what they did is they collected all the beer from the bars and they changed that to the fluids that you need to use to clean your hands. I cannot remember the English word for that. What we also saw in order to cope with that is that companies needed, I call it an innovation motion, which means that you need to take a look at where the value for your company is coming from, what kind of insight you need, with solutions that really help you to improve processes and results directly, because a lot of companies were in survival mode. who are growing that fast that they should keep up with it. And for that also flexibility, agility and speed are really key. And according to me, that requires a data-driven enterprise performance management platform approach, because the more data, financial operational data you have collected already within finance, the easier it is to use for all kind of forward-looking insights and what-if analysis. Please move to the next slide, Leslie. Before that, what I also saw was that the breadth and depth in the Office of Finance was already changing a lot. Responsibilities continue to expand. On the one hand side, improve productivity, like close faster, data governance, process governance, etc. Everything needs to be automated. A lot of emphasis was already there. The second one, what I said earlier about regulation and compliance. Also what I see lately is more emphasis towards corporate tax reporting. Regulation changes I already mentioned, like the lease accounting, Solvency II, that's something for insurance companies in Europe, for bank reporting, integrated reporting I mentioned, but also the way how you need to present the data, interact with stakeholders, the format of that was changing. And actually the first two, according to me, are the foundation to make sure that you can start with the nice things, which is how to become a business partner. And for that, you need to do analytics, very deep profitability analysis, and make sure that you align strategy with execution. Collaboration is, of course, really important. And now with the era where we are in right now with the digitization, a lot of emphasis is on collaboration and risk management, of course. And also, if you have that part right, then you can leverage that in order to improve your forward-looking capabilities, like the rolling forecast, predictive forecasting, custom lifetime value, very deep operational planning, integrated business planning, etc. So these are all the things that were already happening for the last couple of years already. But especially what we see is that it's not about history, but it's getting more important to get better predictions. And especially now when everything is more volatile and much more difficult to predict, it's really important to store your assumptions, to have multiple scenarios to see how to respond when certain events happen. Next slide, please. So how do these trends, these external factors impact the internal organization? So what kind of requirements are important towards the CFO office from these external factors? First of all, you need to be agile to timely anticipate the unexpected. In order to do so, to report faster, to make better predictions, according to me, it's very important to standardize. Because if you standardize, you can automate. And to run, you need to standardize to run business efficiently, but also to report much faster. And it needs to be scalable in order to collect much more detailed data from operations. If you want to serve them as a business partner, and then of course, the solution you are using for that needs to be scalable. Then digital, to automate and to derive insights. Collaborative is of course very important, more important than ever, to make sure that people are aligned in and around the organization, and that people can work closely with each other. And software needs to accommodate that, is supporting to that. And that's more important than ever as people start to work from home much more, and that will stay for a while, according to me. And then it needs to be intelligence. And with intelligence means, I mean that you need to get your ears and eyes open to innovation. Because I think that technology can contribute to stay ahead of the competition. Please move to the next slide, Leslie. When I show this slide, I always ask people, what do you see in this picture? Because you see a painter over there and he's painting something. And what the painter is seeing actually is the potential of the egg. So the egg is there, but the painter already sees the potential of what can get out of that egg. And that's also if you embrace evolution in the CFO office, because if you start, and a study from the MIT Center for Digital Business found out that organizations driven most by data-driven decision-making had 4% higher productivity rates and 6% higher profits. So imagine that if you are able to move towards data-driven decision-making, so you collect much more data to be fact-based, and even you have a 1% gain, what's already the gain of that 1% to your bottom line. And in order to do so, it's very important that both the CFO and CIO take the responsibility to enable this business, finance, and information technology challenge with educated people within your organization, and based on a future-proof IT platform in order to be, on the one hand side, compliant and in control, but on the other hand, enable sustainable value creation. And what we have seen especially, and I saw that in a recent report from Gartner, is that the CIO especially also has much more impact right now because of the COVID-19 measures, what they needed to do to transform organizations overnight into a digital organization. Next slide, please.
Thank you very much. Marco, this is our first opportunity for our first polling question. Up on your screen now, a program for continuous modernization in the CFO office is a responsibility of the CFO, the CIO, both the CFO and the CIO, none of the above. I'll give you a few seconds to answer that poll, folks. It looks like we're at the top of that poll number. I'll share those results for you. There you go. Thank you.
So this is a slide from Ventana Research. I also like to use. It's about the digital transformation, and actually what we've seen that's already it's there for a while, but especially to show the trend is that first much more data was transactional and very few analytical, and of course a very big headcount in order to make things work. And later on, we see a decrease in headcount, and also the analytical part, it's getting much more important. And especially if we look forward towards 2030, we see that the data from transactions is reducing a lot, although the total magnitude of data, and you can see that on the right-hand side, is increasing a lot. But the part of it for transactional data is getting less, as the analytical part is getting much more important. And at the same time, less people need to deal with this. And so that means that they need the tools in order to cope with all that data. Next slide. And something else I saw, that's from the Modern Finance Forum. It's a large community on LinkedIn for finance professionals. More than 55,000 people are part of that. And the one who's responsible for that, Mr. Gary Simon from the UK, he showed this picture of the finance organization some years ago already. In showing, okay, that financial reporting needs to take place, business strategy and performance, commercial finance, special projects. And for that, you need finance talents, good finance systems, process improvements, etc. And also taking care of tax and treasury. But what struck me most about this picture is that he put at the top data governance. Which means that data governance is key in order to do all these things within the finance function. And I agree with that. So this is really emphasizing the fact that strong data governance across all these finance processes is mandatory and needs to be accomplished.
Thanks, Marco. Ms. Leslie, I just had a question here. What do you think is the most important objectives for the Office of Finance?
Yeah, good question. I would like to emphasize that and elaborate on the next slide. Because what I really think is that data stewardship is getting really important for the Office of Finance in order to perform a smarter, better, faster as a business partner, but also to make sure that they are compliant for financial control. And on the other hand, can act as the business partner for financial planning and analysis. And data stewardship doesn't mean that the CFO office is the owner of all the data. Of course, the CFO office is the owner of the financial data. But when there are more operational data is going through the CFO office, the data stewardship means that the CFO office is accommodating that that data is ready for the business to be used in a very reliable, trustable, accurate way. So in order they can use it for collaboration, for data-driven decision-making and to gain a competitive edge. Because as what you can see is that more and more people are becoming, and Gartner calls that citizen data scientists, which means that these are people who are not necessarily data scientists, who really needs to know the ins and outs of the models used, but at least that they are data savvy and they really understand and work with the data and can use that for taking all kinds of decisions supporting the business. And for that, it's really important to have excellent data visualization for speed of thought analysis, very advanced analytics, that they understand what the outcomes are. As more and more the software will provide the information automatically through artificial intelligence and machine learning. And self-service with control is important, so they can play around with the data, but still that everything is traceable. So I think these two things, being compliant for financial control, acting as a business partner for financial planning and analytics, and these are the two most important tasks for the CFO office, and based on a very solid data stewardship that they can provide. Another one is from McKinsey, what I saw. And McKinsey wrote a very good memo about get in front of digital finance or get left back. And there are 4 digital technologies that will reshape the finance function. And of course, this is already ongoing. Automation and robotics, the RPA is there for a while already. Data visualization, as I stated earlier, is very important to provide end users real-time financial information. Then applying advanced analytics for finance to accelerate the decision support. And after that, advanced analytics for business to uncover hidden shareholder value and growth opportunities. So these are the 4 digital technologies that McKinsey is saying that you need to embrace within the CFO office. However, what they found out as well is that many CFOs are unsure where to start. And something else from Gartner is also spending large sums of money to update your current legacy systems instead of implementing a new modernization program. That does a disservice to your organization. And so these are very important factors to take into account, and I will come back to that after the next slide.
Thank you. Our next poll is up on the screen for you to answer. Which of the 4 digital technologies are you adopting first? Automation and robotics, data visualization, advanced analytics for finance, advanced analytics for business. I'll give you just a few seconds to answer those questions. Okay, if you haven't answered the question, I'm going to end the poll. Okay, thank you. And there are your results. Thank you, Marco.
Yeah. So what I made is an approach in order to move to a program for continuous modernization by defining 5 steps. And one, of course, is to get started, think big and start with small steps. then understand in order to get started, you need to know where you are right now. Then you can imagine where you would like to go to. And for that, find how you get there. For that, you need a roadmap. And of course, then in step 5, you really need to make your move. So I will elaborate on these steps in the next slide. In order to get started, I have defined a model, and according to me, a holistic approach is needed. And I always started from what are the value drivers. So what are you really good at as a company in order to succeed? And for example, I asked that towards a very large insurance company, and they said, well, we are really good in managing risk as an insurer. So that's really key, where we are really good at. So then that needs to be reflected in the strategy and the stakeholders and also the information they need. So I start on the top on how to identify how that is reflected in that strategy and the information needs of the stakeholder. Then I will look towards finance to see, okay, what's your vision on how to accommodate that with your information needs, how you will leverage your knowledge you have within the finance organization in order to support that. In order to get started, you need a dream team. And a dream team consists of people who know finance, of course, but also know the business, know the data, etc., and are really fond about technology. Because if you collect the right people, then things will start and make it happen in the right way, according to me. And I'm a big fan of simplifying processes, simplifying methods as well. For that, for example, activity-based costing. Sometimes when I'm at customers, they are still using very complicated models, which were defined 4 years ago, are not up to date, but still used for all kind of allocations and to do profitability analysis. So according to me, that's not right. Then you need to have a data-driven approach, which means that you need to collect data only once, store that somewhere, and then you can leverage it for several purposes. For example, if you have full-time equivalent data, collect that only once so you can use it in all kind of reporting, but also for your KPI calculation. So it's always calculated the same way. There's one version of the truth. And of course, technology and innovation in that needs to accommodate that. And of course, you need to take a good eye on data quality and data stewardship. And technology needs to help you with that. So it's look at people and organization, information needs, etc., and processes and technologies. And for that, I've created a model to take a look at first, understand where you are right now. And what you can see is these 4 elements, organization, data, model, process. And then as distinction between some characteristics if you are still fragmented, which means that you have separate data models for budgeting, planning and forecasting, for your consolidation, for other reporting, etc., with point solutions. If you are a little bit more advanced, then these are connected with data integration, and governance is in place, then integrated. There is, for example, a center of excellence for enterprise performance management. You start with master data management, you have a harmonized data model, and people can start to collaborate. And you are really advanced if it's not only for finance, but also for operations. So there's a harmonized financial and operational single data point model, for example. And you can take a look at where you are right now. And then based on that, you can identify, especially with some people involved, okay, where do we want to go to? And of course, it doesn't need to be that you need to go to the right column for advanced, but you can take bits and pieces, or also from where you are right now, you can have point solutions, but you are still automated, but already people can collaborate with each other. You are using a harmonized data model. So that's how you can use this model.
Thank you. Our next poll, this is the 3rd poll in the series of 4, is on your screen. Where is your organization on the maturity scale? Fragmented, connected, integrated, advanced? I'll give you just a few more seconds. I know these polls are pretty easy. You can go right through them. Okay, I think we're at the top of our number here. I'll end that poll and share those results. There you go.
Great. I saw that there's some room for improvement. So in the fourth step, that's find how you get there. And in order to do so, you can create a roadmap. And based on what's important, of course, that's the scope you set. What's your ambition? Define a vision and transformation roadmap based on evolution and small steps. As what I see often in finance is not a big bang approach, but preferably achieve what you want in smaller steps. And you can see an example over here from a company that also need to grow people. They need to change the infrastructure. They want to remain 100% compliance. They want to use and extend integrated business planning and make sure that they get to analytics-based enterprise performance management. And in order to define these steps, they've created a roadmap for that with several milestones in order to measure progress, in order to get that. What's also very important is to define some guiding principles, and that's very important that you set some rules that despite what's happening, that you can stick to it, and are the guarding rails in order to make sure that you keep on track, and also identify key success factors in order to make sure that everything is arranged in the right way in order to have a successful program or project. Then take a really close look on what's the impact of people, processes, data, and technology, as said earlier. And I think it's really important to select some quick wins so you can show results really quickly, and use data and information technology as an enabler for change. That can really help you in order to step up. Next slide, please. And last but not least, make your move. And I think for that, it's important to implement a data-driven architecture. As I saw from the poll, quite some are fragmented and connected. And how I see that is that still separate applications were used for consolidation planning with a lot of spreadsheets around it, for disclosures, where you see that there are multiple copies of the data. So reconciliations is important. You cannot collect too much data because of all these reconciliations that needs to be made, and the systems cannot accommodate that. And I think the important change is that you implement a so-called process and data hub in which you can collect all the data and then bring applications to that data. So from the same data, you can leverage that for your profitability management, for budgeting, planning and forecasting, consolidation, but also if you take tax reporting, the tax reporting is derived from your consolidation, the so-called commercial balance to your fiscal balance. That can be done through this platform as well, but also make sure that additional data that you need for tax reporting purposes also comes from that platform. And then you can leverage that platform for all kind of analytics. And now I hand it over to Leslie to talk a bit more about that, how CCH Tagetik can do that.
All right. Thank you very much, Marco. Alrighty, so taking a look here, we have the CCH Tagetik Finance Transformation Platform, where we are bringing together the data and your processes all in one unified platform, beginning with your traditional corporate performance management solutions of financial close and consolidation, your budgeting and planning. Then we extend that and we go beyond. We have regulatory solutions, and we also have extended it with our analytic information hub that is bringing in the more granular financial and operational data to supplement what you already had on the financial side there, to enable us to go beyond with extended regulatory solutions that, the new contract regulations there, the lease accounting, the revenue accounting rules, as well as expanding the close. We've added in account reconciliation piece as well. And then on the planning and forecasting side, then extending out from beyond having the financial planning, but now truly into the operational planning side there with sales planning, workforce planning, industry-specific planning, anything that you're going to need to tie planning across the whole organization together. And as well with the profitability side, and of course, embedded in all and underlying it all is the predictive planning and the predictive analytics. So with that, with everything together in one unified solution, then we're bringing that together so that you can accelerate your close, that you're able to then have the gain the control with your getting that increased transparency. When you're having more within one solution there, you're able to do the drill down, you're able to have visibility across the organization, and of course it's control. So it's all got the data and system governance that you need to feel confident in your results. And then that way you're able to then make your right decisions faster. So we've connected finance and operations, as I said, the planning across the organization there. So now you're able to, have that visibility to easily gain those insights to look forward. And of course, embedded with that AI machine learning, then now you're ready to predict the future with confidence. A little bit more about our platform here. So it's finance owned, and what that means then is you have the power to make the changes yourself. You're not, it makes it an agile and flexible solution. It also reduces your IT dependency. We are certified by SAP HANA, one of the first ones outside of SAP to be certified with that. Bring the power of SAP HANA to our platform there for the fastest processing and also the ability to process that high volume granular data. And of course, full integration with Microsoft Office there to bring in the full numbers and narrative, as Marco was saying before, to actually bring that storytelling to life and have that trickle down through all of your reports, both your on your annual reporting side and also your budget and planning books. So going beyond, when we're talking about planning here, we have a comprehensive but also flexible solution here. So it's going to take account into any time horizon across strategic, financial, and operational here. As I said, here are some examples on department planning. We have extensive cash flow planning, project planning, and of course, then that blends itself together for a full integrated planning. As well, going beyond, we've also introduced new planning apps this year using the best practices gained over 20 years of implementing these solutions for our customers. And we were able to package these together so that you're able to implement very quickly and incorporate these planning types into your system. So as we said here, we have cash flow planning module, risk adjusted planning, workforce planning, really easy to implement and get started immediately. The other thing that we hear a lot of clients looking to, of course, is accelerate their close. It's one piece of work that often ends up with a high peak of volume at the end of the month, and we're going to try and reduce that volume and have the peaks, have it continuous accounting through the month. So we can do that, of course, with with the end-to-end close all-in-one solution. So it said we've expanded and now start back at the account reconciliation, add through to your local close, to your group consolidation, to your financial reporting, off onto the disclosure, the tax reporting, which Marco was mentioning before, and then all the way through to IXBRL for ESMA. So you're able to get that full close to disclose all-in-one solution. We also, as I'd mentioned before, have a comprehensive regulatory solution. So we began many years ago with Solvency II for the insurance side there. Of course, we have other regulations for European Banking Authority, the IXBRL, your insurance contracts, both for LDTI and IFRS 17, and of course, the lease accounting revenue ones that are newly added in recently. So I want to hear from you.
Thank you so much. The last poll is on your screen. Which process is your top priority for automation? Financial close and consolidation, financial planning and analysis, profitability management, regulatory compliance. I'll give you just a few more seconds, folks. There's a lot of thought to that one. And we don't share the results of these if regulatory compliance is not at the top of your list. Okay, I'm going to share those results. And there you go.
Okay, very interesting.
Yes, very.
There, financial close and FP&A 1 and 2. There you go. We often see a split among the house. And the other thing we often see is people often phase things as well. So if they're, what is their top pain point, basically, and they might do with close first and then move on to planning. Alrighty, so I wanted to go into a few customer stories here. So Driscoll's, which brings berries, fresh berries, of course, to supermarkets everywhere. They were looking to speed up their reporting and their costing to understand that a bit better. They're looking for a really granular level of detail in that. So they were very pleased with the power of the Analytic Information Hub there, bringing together that financial and granular operational data. They're refreshing every hour to almost have what I would say real-time information down to the berry box, basically across the globe and all the markets there. So they're able to have their fingers on the pulse of that costing information, of that reporting, and they're able to also with the flexibility there to report any which way they choose. So in the traditional reports that they have there, and also perform that analysis continually so that they can be adjusting their costs and the prices as needed. The next one I wanted to talk about was also using CCH Tagetik to improve their consolidation and financial reporting. So Keurig Dr. Pepper, of course, recently merged. So they were looking for a solution, a flexible solution that would be able to handle the needs from both of the original companies, but bring together in a unified solution and to bring up so that they could have the consolidated results. They were looking for ones, well, that were going to be able to have that drill down that they needed to, down back through to their ERP level there. They also wanted to have a singular workflow, comprehensive workflow across the solutions there, so they'd have visibility across both of the companies of where they were in their processes. And where the status was, where the bottlenecks were that they could solve. As well, then they were looking for flexibility because they had reporting that they wanted at the consolidated level, and then they also needed to please the reporting back as well across the company. So they needed to have many different views, many different alternate hierarchy views of pieces there. And to take into account not only US GAAP, but of course, IFRS. So the other thing they were looking for as well was a stable cloud environment. They're moving from on-premise, and then with the global operations, then they really wanted to go to the cloud solution there to have access to for everyone all the time. Going across at the other side here, Ropes and Gray law firm was looking to improve their budgeting and planning and management reporting pieces here. And what they were doing is actually going beyond traditional financial planning, looking at true driver-based planning to look at their revenue, their OPEX, CAPEX, and also workforce planning, which they also wanted to take into account seasonality and business days and other variations that they saw across their projects there. They wanted to have a truly flexible system there that would take all these factors into account, that they would have multiple users on, that they would all have, though, the same source of truth for what their results are going to be, and the flexibility there for the reporting side of it, and the control of it, to have that one view across all these processes to ensure that they had the accuracy and that they had the full transparency that they were looking for. Another customer, Milwaukee Tools, was looking to improve their allocation process here. So this would be from one of the customers that had the most granular data set, even more granular data set, I think, than Driscoll's. So what they chose is they chose CCH Tagetik on SAP HANA, so that they would have the fastest solution and a solution that could handle that granularity that they're looking for. Not traditionally an SAP house, but they chose to go with that route specifically for the flexibility and the capabilities that SAP HANA brings. So with theirs, then they also were looking to streamline. So there had many different source systems there. As I said, they had, they as well were looking at key components with revenue, HR, and also promotion planning there with the workforce planning pieces there. Their old systems were inflexible, meaning that they were IT dependent. So any issues that they had or any changes that they wanted, they had to wait a long time for. And they were looking for some pre-built functionality, some true financial and manufacturing intelligence to be built into the solution there, so that they wouldn't have to be bringing that and adding that in for any time they did any changes. So with a true driver-based planning then, now they're able to do their top-down spreading. We were also able to streamline their allocation rules, their allocation process here, so it's much faster and more agile. As well, they're looking out to the future. So before they were only planning and forecasting, semi-regularly, and now they're fully able to do that 18-month rolling forecast to the level of detail that they wanted to, with the reporting that goes along with it, the flexible reporting. As well, all in one unified solution, so that all their users are accessing the same solution there, be it whether they are the power users actually administrating the allocations and or the end users who are reviewing the results and taking those results for further analysis. They wanted to have something that was simple to use, that had the look and feel of potentially Excel, but in the web template and the zero footprint, so that they could distribute it to many different users across the organization, as well as the executives there, who now have much better confidence in the results there, because they can see exactly how everything's being fed into the system, the workflow to monitor it, and the assurance that everything is now accurate. So with those examples then, and before them, then we say then that with CCH Tagetik, with our finance transformation, then you are truly ready for the future. So not only do we support your traditional financial performance management solution with the consolidation, planning, and regulatory reporting and disclosure, profitability all in one, but we're also flexible for the changing market conditions, which is very key, of course, as Marco said, and as we all know, this year, change is the word. Many of my planning friends are extremely tired, but doing all the multiple scenario analysis that they have to do, the continuous forecasting that they have to do this year. They're all looking to see greater automation, so that they're able to click the button, see those changes, and be able to report those changes to their management, so that everyone can then see what they need to do and or decide on the next steps they need to take. So with the finance owned and maintained, able to quickly make any of those changes, build those alternate hierarchies take in that extra data, make those changes and in a scenario and simulation pieces so that you can then predict the future piece easier. And then going beyond, right? So ensuring that it's all in one system, that your results are truly data driven, that it's able to have that high volume of data, as well as, I didn't mention this before, but of course with the granular data then goes along with it is the unlimited dimensionalities there to process that any way that you need to. Bring it along with the financial data to have that one view at the top, for which then you can drill down to the bottom. So with that, then you're able to gain the insights and you'll enable your digital transformation and modernization so that you're able to accelerate your close and get your faster and better decisions, which is they're going to then enable you to drive the business and by driving strategy and improving your business performance. And with that, I'll hand it over for questions.
Thank you so much, Leslie. We do have a question from Marco. Marco, using the think big but start small mentality, how can we modernize in phases?
Yeah, as in the CFO office, the planning and control cycle consists of multiple different smaller processes. So there's of course the consolidation and reporting process, there's the budgeting process, a forecasting process, operational planning processes, or cash flow collection needs to take place. And what I think is important with the think big is to take a look at, okay, where do I want to go to? How I want to enable the finance vision I have with the right tools. I think it's important to leverage a platform like CCH Tagetik. But then it's important that you can take a modular approach, which means that you can either start with consolidation and reporting, or you can start with cost allocations, or you can start with your budgeting process, and then over time expand. So I think that's the right way to do it. And especially it's important to involve people from your dream team in order to make sure that when that vision is there where you want to go to, that they know, okay, and this is the kind of solution we need in order to make small steps, but then finally have a complete picture in the end with a data-driven platform.
Thank you. We have one more question, Leslie. How do you see customers phase projects? What's the latest trends?
The latest trends. Well, I think, starting with your pain point. So we often see, as you saw, the examples there were very clean cut with people with consolidation or budgeting and planning. But often we see, customers that have consolidation, planning, and regulatory. And I think you just start with the one that's going to bring you the quickest win and as I said, have the biggest pain point there. So we often see people starting with consolidation, then maybe working through financial planning, and then going down through operational planning pieces as they build on that side. So I think that would be the way. Otherwise, yes, you can start with the planning first and bring it across and do the consolidation later. Thanks.
Excellent. Thank you. That does bring us to the top of the hour. We do thank everyone's participation, and Marco, Leslie, again, all your thought knowledge shared with our FEI members and guests. We do appreciate that. As I said earlier, we will have a 7 to 10 business day wait period for CPE credit. If you are waiting for CPE credit, we appreciate that and your patience. Again, thank you for your presentation today, audience. Thank you for participating. This does end the webinar for this afternoon, and we wish you the best of the afternoon.
Okay. Thank
you.